Only Hang Seng, which is in the green as far as the Asian markets are concerned. Shanghai is down around 3 points.
But the strength of these recent readings indicates that inflation pressures continue to run high.
Since its weekly expiry, maybe in fact that 17,050 odd level holds out today. And if that is the case and we don't get any incremental negative news coming in from the globe, maybe that short covering bounce still is on the cards.
I mean, it really makes your head spin to see the kind of talk that we had today and its impact on the marketplace.
Reliance's consumer arm has gone ahead and launched some new products.
Actually, if you look at the transmission segment, it's been less competitive.
It is lower, as the pre-open indicated, by about 65, 66 odd points.
Incrementally, inflation has become a bigger concern now.
It will change the current regime of tariff, which is actually pancaking tariff or cascading tariff.
IT is on the back foot. The Nifty IT index down 0.8% for the day. For the week so far, it's lost about 3%.
Now, government is working when it comes to the legal opinion as to how they should frame this new regulation.
Markets at least holding on to that 17,190 mark on the Nifty. We have seen some recovery from the lows.
Okay, last hour here this Thursday afternoon. You're with us here on Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Reema and Surabhi here, and Nigel joining us from the newsroom floor. Guys, hi, good afternoon. Things are quiet, and actually they were quieter maybe 15 minutes back. They're not so quiet. We're down 40 points, which basically means that we are back at levels where the market was at 10 in the morning, after the actually 50 now, and coming down sharp. 10 minutes back, we were absolutely flat. So this is a pretty swift slide we've seen come through. So all of the gains and expectations to gains all kind of started fizzling out. Intraday 17,200 also got taken out. Which means just about 17,200 was the day's high. And now we are a full 100 points off that level. Asia was up. Mostly most Asian markets were higher. Europe is mostly lower. So, as the day has progressed, sentiment has kind of worsened a little bit. Global markets still very much the center focus. The Fed is behind. It's the day after, but I think the clarity on what happens to deposit backstop, I think comments from regulators or top officials in the US, I think that should do the trick. At least that's the reason why the market sold off in the last hour out in the US, and that has been the worry out there as well. So not looking all that great. 17,100, as I said. It's a 4.5, 5 hour low if you're looking at very, very intraday kind of moves. Reema, hi.
Hi, quite disappointing, right? The intraday high today on the Nifty was 17,205. So very close to yesterday's intraday high of 17,207. So we almost got there, but from there has been a very sharp reversal, particularly pull up the Nifty Bank, which is down 200 points. The Nifty Bank from the day's high has slipped more than about 300 points, now 370 points. And look at that waterfall decline that we've seen in the Nifty Bank. Individual constituents over there, Kotak Mahindra Bank, State Bank of India, these are stocks which are selling off very rapidly. Apart from that, Bajaj Auto, Reliance Industries, weak in trade. IT is taking a knock once again. The Nifty IT index approaching a 1% cut, with HCL Tech down 1 1/3 and Wipro 2 roughing it out with a cut of 1 1/4%. So 17,100, right, on the Nifty?
Absolutely. It is the banks that are playing spoil sport. It's also, the weekly expiry. So let's see how some of these events play out. We were expecting some volatility, and I think we're getting that action around about now. Just want to point out some more names on the banking side. Let's pull up the intraday charts for, let's say, an IndusInd Bank, Axis Bank. These are still positive. That's the contribution. You're seeing far more stocks on the negative side than the positive side right now. And even the ones that are positive, like IndusInd and Axis, very sharp deceleration in stock prices, which is underway as we speak. So banks are a problem for the market. There's some selling that's evident in HUL, in ITC. Some of these FMCG big names still positive, but the selling is now something that you can't ignore. And that Nifty Bank chart obviously is where the action really is. On the counterweight on the other side has really been select auto. So Maruti is still, for instance, tracking a 1% gain. There's some buying in Bharti, which is still intact, about 0.5%. But it is getting a little tricky, to say the least. So Nigel, I guess a lot of action. And it's once again the banks that are doing the talking.
Well, that's right. Earlier this morning we said if you go to 17,050 and you protect that level, you could see a bit of a bounce. I think that played out, right? Because we were up close to around 120, 130 points from that 1750 odd mark. So you got the broad range today. Both the goalposts. One is at 17,050, which is the low of the day, close to around 17,045. And the high of the day was around 17,205. So 17,200 becomes very, very important. Given that we have weekly expiry that is going to play out, I want to pull up two strikes. One is the 17,200 call. Now, the positioning is such that we don't revisit the highs of today. If by some way we go to that level, then you would expect a big short covering bounce. But for now, it appears that the premium has come down to zilch and this big open interest built up. So 17,210, we are unlikely to go there going by the data points. But on the downside, actually, we had a very crucial mark. And the Nifty is down close to 40, 50 points, as you all were saying. But the 17,100 put, you have the Nifty that's moved a little below the 17,100 odd mark, but the premium hasn't gone up. There is some writing that we're seeing out there because we're nearing expiry in the next 55 minutes. This contract will expire. So keep an eye out on the 17,075 odd mark. That's around 25 points below 17,100. Need to hold that level. If you break that, then you could see a further slide. So just watch out on that mark. 17,075 is crucial on the downside, and the bulls will be hoping that that holds out for the next 55 minutes on. Back to you guys.
Okay, let's tell our viewers then what we've lined up on closing bell today. In the next 1 hour, we put the spotlight on a whole host of stocks. Hindustan Aeronautics is under pressure after the government floats an offer to sell up to 3.5% of its 75% stake in the company at a discount of a little under 7%.
GR Infra surges in trade as the company emerges as the lowest bidder for the Bang multi-purpose project in Arunachal Pradesh and the NHAI tender for 6-lane highway project in Maharashtra.
GAIL tells CNBC-TV18 the hike in gas transmission tariff is positive for the gas economy, even as it wants a review of the hike. City gas players IGL, MGL say they will hold prices till a decision on Kirit Parikh panel recommendations in April. The key takeaways of our conversation coming up on the show.
We'll, of course, discuss portfolio ideas with our alpha manager of the day. Harish Krishnan of Kotak AMC joins us. All this and more over the next 60 minutes.
All right, Mitesh is with us to run us through what he wants you to do now. I mean, this is a bit of a tricky situation with the latest round of selling we've seen. Mitesh, hi, welcome back. We were talking in the morning that maybe with an hour, I think at about 10:10 when we spoke, we were wondering whether we've seen the lows of the day. Now with this latest bout, I don't know. What's your sense and what should one do?
So, Prashant, actually we did move up during the session and then, we have again tapered off and back to those levels. But I think 17,050, I think is, as long as that holds, maintain some kind of a positive stance. Also is the fact that the Bank Nifty, the intraday averages are placed around 39,800, 700 zones, and we are not very far away from there. So I think either the Bank Nifty breaks 39,700, or if the Nifty starts breaking 17,050, then turn negative. Till then, I think just try to be on the positive side, and let's hope that this range still produces some kind of a throwback on the upper end. On the stock side, with that kind of an idea, I have two buy calls. Muthoot Finance is something which is reversing very nicely, so that's a buy. Here I would recommend a stop just below levels of 970 and a target of around 1,020 on the upside. And the other one which I like is Naveen Fluorine. That's a stock which is breaking out of some kind of sideways activity. So that's a buy with a stop at about 4,200 for targets of 4,350.
Autos are having a good day. So Maruti Suzuki is one of the big gainers. It's an up move of more than 1.25%. The company did indicate today that they are planning to increase prices across models from the 1st of April or in the month of April. They haven't quantified what the extent of price increase will be, but Maruti Suzuki is planning a price hike. And it's not alone. Tata Motors yesterday indicated that across its CV portfolio, prices will go up by up to 5%. Again, 1st of April is the date that they have outlined over there. And Hero MotoCorp earlier today in the morning announced that for its motorcycles and the two-wheeler segment, there will be a price hike of up to 2%. So across the board, in the month of April, auto companies, your vehicles are going to get far more expensive. So that's the auto space, and it's fueling an up move in the stock. Let's also talk about the insurance sector. The government will list the finance bill for consideration in the Lok Sabha tomorrow. Yash is here with the details and the impact on the listed universe.
Well, Rima, we all witnessed the kind of correction which insurance companies saw once the budget announced taxing long-term savings life insurance policies. Now, tomorrow is an important day because insurance companies, life insurance companies, would be keenly awaiting if the government has accepted any of those recommendations from the industry in terms of making amendments to that tax on long-term large savings life insurance policies. Tomorrow, the government lists the finance bill in Lok Sabha. Of course, finance bill would carry any changes to budget proposals, and insurance companies would particularly look at any relaxation being given on the taxation front on this particular product. What has the industry demanded? Two things. One is that the taxation is on policies if your cumulative premium for the year increases or goes above 5 lakh. The industry has demanded that take this limit higher to about 7 lakhs or 10 lakhs. That is the first demand. The second one is providing indexation benefit, which means the capital gains, when it gets taxed at the time of maturity, should be after factoring in inflation into the cost of the product, which means that since it's a long-term product, life insurance policies, the indexation would have a much higher impact, the cost would go up, and ultimately the capital gains minus the cost will become much smaller, having a limited impact as far as these products are concerned. We'll have to watch out whether the government accepts any of these two requests. Indexation, if given on this particular taxation, will be a major positive as far as these companies are concerned.
All right, Yash, thanks very much for the updates over there. But this is a disclaimer, and it's a very important one that we need to put out. What Yash was mentioning is only what the life insurance industry is hoping for. In no way are we suggesting that this is actually going to be coming. We're only highlighting the industry expectations, given that the finance bill is being tabled tomorrow in Parliament. Well, on that note, let's take the conversation forward. We do have Dilip Bhatt now joining us. Dilip, before we talk about the overall market, since this is such a hot issue and we started seeing some buying at lower levels in these life insurance stocks, what do you think? I mean, obviously, if some sort of a relief comes in tomorrow, then it's a bonanza. But if it doesn't, if the current dispensation stands, then would you look at buying any of these beaten down stocks?
Well, even if the government doesn't really accept some of the demands of the insurance industry, I think the correction has been fairly very good. And considering that overall penetration of this particular industry and considering the fact that the overall prospects look good, I think certainly these stocks merit a look from the current levels, of course, on a longer term basis, because a lot of things are changing out over there. But yes, I think life insurance, certainly the stocks within that certainly look good. My only caveat over here is a lot of these frontline insurance companies are owned by some foreign collaborator abroad, and they have been regularly selling. So I think that overhang possibly is something that we have to reckon with even as we try to accumulate these stocks.
Hi Dilip, good afternoon. Dilip, I wanted to ask you about Vedanta. You know, the promoter entity at one point of time, the fear was that maybe at the parent level they'll default on the bonds, and you had the yields that spiked up as well. Today, some reports indicated that maybe Mr. Agarwal could look at selling some part of Vedanta. He's clarified to us, we wrote to them, and in fact, they said that there is no plan whatsoever. How do you approach Vedanta at around 270, 275 rupees? Valuation-wise, it's very, very cheap. The uncertainty is on the promoter entity. Your view?
Nigel, I think Vedanta has always been in the midst of some kind of corporate governance issue. Always, I would say. But otherwise, yes, Nigel, you're right that it's extremely cheap. And I think on a risk-return basis, the risk is limited. My own view is that are they going to default in the bonds? My broader sense says no. I mean, even if it means doing whatever it takes, they will do that. So I don't think I'm worried more about that. But yes, I think it has got a lot of liabilities, which is really, which is bothering the markets. So I would say that Vedanta from the current levels, I would say yes, on a longer term basis, I would certainly buy, because I think the risk return is strongly loaded in favor of Vedanta. Having said that, as what I said, corporate governance has been something which they really need to tone up.
All right, Dilip, stay with us. I just want to highlight a few other names which are making moves, one on the downside, the other on the upside. HAL is under pressure. The government has, of course, floated an offer to sell up to 3.5% of its over 75% stake in the company. There's a discount, of course, which it is giving. And the other one is GR Infra. At the time of the IPO, there was a great deal of demand. Of course, stock has done pretty poorly since. And today, it's up about 7%. There are orders, I think, on the back of which potential orders on the back of which the stock is reacting. Vivek has got details on both these. Vivek, over to you.
That's right, Prashant. So let me first take you through, what's exactly happening in HAL and, some analysis as well as to what exactly quant analysts are saying in terms of what the OFS does as far as the promoter weighting is concerned and the free float is concerned. Like you mentioned, the OFS, 3.5% equity dilution from the government. It's a divestment. This is mainly to meet the minimum public shareholding norms, which was slightly above the 75%. So now, on the back of that, what Morgan Stanley is saying is that, number one, the size of the OFS is actually less than 5%, which was the market expectations, and thereby removes an overhang. And what Morgan Stanley says is that they remain overweight and, in fact, would look to use any weakness to add to the positions. Now, interestingly, Nuvama Alternative and Quantitative Research also says that on the back of this particular OFS that has been floated by HAL, the government stake sale will actually lead to an increase as far as the free float is concerned. Now, the stock, which was already the top contender as far as an inclusion into the MSCI Standard Index is concerned, and this is for the May review, so we are still a couple of months away. Earlier, the cutoff price as per their expectations was 2,650 rupees a share. Now they believe that post this OFS, it falls to around 2,150 rupees a share. So they believe that this particular stock would now likely see higher weightage as well as higher inflows of close to $195 million once the complete OFS is subscribed. On the back of that, HAL under pressure today, but do watch out for any event development in terms of the MSCI impact.
And Vivek, with the GR, are the potential orders very large? I mean, briefly?
Well, absolutely right. Two large order wins that the company has said, emerged as lowest bidders for two of the orders. Number one, it's been declared as the lowest bidder. This was a tender that was invited by NHPC, and this was for the Dibang multipurpose project in Arunachal Pradesh. It's a JV partnership with Patel Engineering, 50% for each of the partners, and the project cost is around 3,630 crore. The other one is for a 6-lane highway. It's a tender floated by NHAI. This is in Maharashtra, hybrid annuity project, and the project cost is around 872 crore. So, operation period of 15 years and project completion period of 730 years. The first one is more important, a 50% JV partnership with Patel Engineering, and, expected to complete quite soon.
So many infra companies have been announcing very large order wins of late. Thank you very much, Vivek, for highlighting that. Dilip, wanted to get your thoughts on Hindustan Aeronautics. Now, the stock is corrected on the back of a technical supply issue, right? This offer for sale. But does the stock correction offer an attractive entry point if someone has a 2 to 3 year time horizon, given the triggers Vivek spoke about, the possibility of MSCI inclusion, plus so many analysts are bullish on it over the longer term, given the order wins?
Rima, without doubt, I think HAL prospects are certainly very good, and the addressable market that they have is huge at the moment. And possibly it is getting reflected even in the performance that we are seeing. But I always say that one of the things that you have to reckon with is it's a PSU. And second, of course, what you have to reckon with is that any PSU doing very well on the stock markets, generally you will find OFS happening sooner than later, and rightly so, because government requires cash. So I think taking all these factors into consideration, maybe a short-term momentum and a short-term one can take a bet from the way it's corrected. But I think on a longer term perspective, I think both these factors, a PSU as well as OFS overhang, I think will always weigh very heavily on these particular stocks, especially in the PSU, notwithstanding that the weightage in MSCI may go up.
Okay, all right. Just one more word on HAL. I was just looking at the futures plate. And, you have the market-wide open position limit. As of now, there's a big surge in terms of open interest. And if things stand as what they are as of now, there's a bit of a strategy. You're short in futures, you hope for allocation in the OFS. And if that happens, you play that arbitrage. But as of now, as things stand going by the open interest build-up, there's a high likelihood that the stock could go into the FNO band. So just keep that in mind. So I just want to point that out on on HAL. Just take a look at that. 16 lakh shares have been added out there. So there's a probability that that's what could happen as well. Well, I think for the time being, we'll slip into a short break. You come back, we'll continue our focus on markets. We'll also get, our market expert who will be joining us. But as we take that break, well, let's hear out Mr. Yardney of Yardney Research, what he had to say on Treasury Secretary Janet Yellen's comments.
I think Janet Yellen misspoke. I think that Powell's position is probably the one that's going to prevail here. And the idea is that, yes, the government, the Treasury, that is, and the Fed are not in a position to insure deposits, but they are in a position to guarantee that the banks themselves will remain safe. And so I think that's the fallback position that Yellen's going to have to get back to really quickly here.
Well, the market's shaving off a little more now. We are down about, just about 0.3%, 60 odd points. So, yeah, the decline is still in progress. Apart from the banks, the other big stock that has really not found any favor today is Reliance. It's down about 1.5%. Dilip, wanted to discuss this with you before we let you go for the day. Earlier in the week, there was that one day when Reliance had a great pop. A couple of, positive brokerage notes had come in. Even today, there is a lot of news flow about what they plan to do with their retail operations. For instance, launching a huge number of brands. But the stock continues to be in this rut, in a complete range. What are your thoughts?
Sure. I think Reliance continues to be on our radar. We may not be in a hurry to buy. I think the intrinsic sum of parts value really adds up very well. But I think considering the fact that there are too many moving parts and too many uncertainties, which is there in the markets, and of course the way the FIs are selling, and of course when FIs sell, I think some of the frontline stocks where they hold a big lot is the one where they would be selling. So I would say that we'll still wait for a while, but yes, it should be bought very gradually as it tries to going for some correction further.
All right, Dilip, thank you very much. Good speaking with you. Appreciate it very much. Let's welcome in Harish Krishnan now. He's Executive Vice President and Senior Equities Fund Manager at Kotak Asset Management Company, who's going to answer some questions now. Harish, good to have you with us here. Thank you very much for your time. I was looking at, you on Twitter, and you're prolific. Lots of interesting stuff, apart from, of course, the here and now. But starting with the here and now, since we're talking about markets as they stand, what's your view? You put out a table in terms of the current drawdown in dollar terms and where India stands amidst sort of global peers. What's your view, though, from here? At 17,000 levels, have markets become attractive, or there is still some way to go?
Right, Prashant. So clearly from a drawdown perspective, I think the limited point that I was trying to make is that India in dollar terms is no different from most of the world, except, of course, China, which has seen a 50% plus drawdown over the course of the last 2-3 years. So we're down close to about 20% in dollar terms. Of course, sitting in India, as domestics, we see a far more shallower drawdown with the currency giving up a lot for the foreigners. Having said that, I think 17,000 levels of Nifty or above does present us with an opportunity to increase our allocation to equities. A lot of froth. We've seen a reasonably large time correction, close to about 18 months of time correction. A lot of froth, especially in the mid, small and micro caps, have kind of gone off. Large cap earnings have continued to be reasonably okay. Of course, the last 2 quarters, there was a spot of bother from a margin point of view. But we do think that margins can potentially surprise on the upside now going forward. So in totality, when we look at it, I think it still is going to be a range-bound market, but the current levels does provide a slightly more attractive zone to increase our allocation to equities, which is what we've done, for example, in our asset allocation products, where in, say, June, July of 2021, when markets were closer to their highs, we were at about 30% in equities, and today we are close to about 52% in equities.
Okay. So in the last 1 month, Harish, where exactly did you allocate your money? Which were the themes, the sectors?
So I think we continue to have a positive theme on manufacturing. That continues to be a theme where we see a slightly longer term promise and a potential to perform. The other sectors that we've kind of increased our exposures are to the auto and auto anchs. That's a space that has seen a reasonable amount of time correction, if not price correction, over the last 3-4 months, and we've increased our exposure there. Healthcare or pharmaceuticals has been something that we've generally been a bit circumspect on, but after a reasonably 5-year kind of correction, we think that there is a reasonable margin of safety, and so that is the other area that we have incrementally deployed some capital towards. And lastly, among the bigger 2 sectors, both banking as well as in technology, I think we've increased some exposure over there as well.
Hi, Harish. Good afternoon. Harish, tell us more about this contra trade. You know, we have a lot of people who come on the channel, they talk about banks, IT, but pharma has been the ignored one, and that's been the big underperformer. And as you're mentioning, you're allocating more money to the healthcare space, the pharma space as well. So what are you looking at out there? If we could, drill it down further, is the worst of US pricing behind? And are things looking up as supply constraints now get sorted out?
So, Nigel, unfortunately, I don't have any near-term catalyst to sound out saying that this is the catalyst that we're looking out for, wherein this significant underperformance will correct itself. But the way we look at things is we look at the profit pool share of pharma. And, when we plotted over the last 22 odd years from 2000 till now, the pharma profit pool share of the top 1,000 companies is actually at its lowest that we've seen over the last 15 odd years. And that, to our mind, obviously reflects a lot of the points that you said. The fact that there was significant competition, a lot of new players came through. You've had delays with the FDA and their approvals and some site inspections not going your way. So all of that has taken a toll in terms of the overall earnings potential. And our sense is that, typically when we are at a zone which is at a multi-decadal low of profit share, that typically is a reasonable good time to assess the overall sector. And therefore, which is where we are incrementally allocating there, where we think that currently there is maybe too much of fatigue. People have kind of given up on the sector, which was not the case about 5 years ago, where everybody was touting on India's as the destination for pharmaceutical en masse. From a catalyst point of view, while we don't have any near term, but I do think that the current dynamics, especially for US, means that a lot of tail companies, companies which have got very few approvals, will slowly vacate out. And therefore, we'll start seeing some pricing power come back into the hands of the bigger franchises. So in some sense, that's the narrative that we are expecting to happen. Whether it's going to play through in the next 6 months, 12 months, we are not so sure. But we do think that there is a reasonable margin of safety, and which is where we are kind of increasing our exposure there.
Okay, so that's a view coming in on pharma. Interesting thoughts there. Harish, good afternoon. Surabhi here. Just a while back, I was actually chatting with Nilesh. We were doing a conversation for our digital platforms, talking about just how to, place yourself in a market as volatile as this. And guess what? I asked Nilesh, listen, please give us at least one money-making idea for this year. So very rare for Nilesh to say anything, right? But he said infrastructure. If you really push me to it, I'd say infrastructure and manufacturing is what you have to look at this year. So now let me ask you, how are you positioning for this in the portfolios? There are a lot of, companies are really getting orders. We see it on a daily basis, but it's a very large amorphous space. So if you could just, specify a little further and how you are playing it.
So I think clearly private capex after almost a 10-year kind of phase wherein private capex was flat at around 6.5 lakh crores on the listed space, we've started moving it beyond 7 lakh crores in the September and December quarter on a run rate basis. And we do think that this number can potentially be closer to 9-10 lakh crores over the course of this cycle, over the course of the next 2-3 years. This is on a yearly basis, of course. So that sets the base for some very interesting opportunities that do come through. We're reasonably more sanguine on the prospects of companies which cater to the process industry. So companies like, for example, bearings companies, explosives companies, or it could be in the form of automation companies. A lot of them are multinational corporates which have invested during the long downturn that was prevalent in India. And now, at least in few of them, we are actually starting to see India coming out as an export hub for many of their products, given what's happening in Europe and also what companies are trying to wean away from China. So I think this is not just a hope trade. We are actually seeing it in the work. So that's an area that we are positive on. The other areas which haven't actually quite performed are areas like cement. Which again we think can be in for an interesting time as energy prices kind of cool off. That's the space that we think can benefit with increasing consolidation and better pricing power prospects. Similarly, gas utilities, another area which got hit very badly because of what happened in Ukraine and Europe, I think is seeing some softening, and there have been some regulatory reforms and nudges that have come through. That's again an area that can see some kind of interesting traction. And lastly, I would say autos and auto anchs. Again, a very interesting manufacturing space where we do think that the next 2-3 year prospects continue to remain very bright.
Okay, I heard you speak a lot about different parts of manufacturing, but the very obvious names like, for instance, road companies, that seems to be missing in your list. Is that a call on valuations? Any other concerns? Okay, I think we've just lost that feed. But that was Harish Krishnan telling us about some of the sectors that he likes. A contrarian call coming in on pharma, healthcare, and of course, they are playing infrastructure through a multitude of different ideas. Before we let you go, Harish, what I was trying to ask was that you mentioned bearing companies, you mentioned cement, a couple of other plays, even auto, but I didn't hear you talk about the very obvious infra names, like let's say tolling companies, road contractors, EPC. Any thoughts here? Okay, I think we're having a bit of a tough time with that line, so we'll keep that that question and the rest of that conversation for later. Do have to take a very quick break with the news. The market is not going anywhere, just a 50-point decline, and the bank nifty is down about 250 odd points. That's the situation, at least as of now. As we take this break, hear out some important opinion that we got from Robert Sokin of Citi. He believes that volatility and uncertainty is here to stay, which is not particularly good for equity investors.
The moves that we've seen since these banking stresses have emerged in markets have been huge, and at times you see Treasury yields move up significantly. You've seen them move down significantly. You've seen stress in a lot of different areas. I really think that's the market trying to figure out exactly how deep and how far these stresses go, and that's probably going to continue for some period of time into the spring because you're likely to get more episodes of banking stress at certain players in the U.S. You're going to get market fears about banks in Europe. They'll probably flare up at different times. So I think we're in for a period of volatility and uncertainty, and certainly that doesn't help from an investing standpoint or from a stability standpoint.
Welcome back. The sell-off in the banks is getting quite ugly now. The Nifty Bank has extended its fall to a 1% cut. It's down 400 points, and from the day's high, The Nifty Bank has sold off nearly 600 points. And with the fall today, with the Nifty level at 39,600, it's also breached its 200-day moving average on the way down. PSU banks are seeing a bigger cut. The Nifty PSU banking index is down 1.7%. And amongst the big financial losers, you've got Kotak Mahindra Bank, State Bank of India. In fact, these are the top two Nifty losers as well. Mitesh is back with us to tell us a few technical trading ideas, a few BTST trades as well. Mitesh, afternoon once again. Thoughts on the aggressive sell-off in the banking space, any trade on the Nifty Bank, and then your BTST calls?
In fact, the Nifty Bank breaking below 39,800. It's also broken the 200 average at 39,770. 39,800 was the area where a couple of intraday averages were placed. So breaking this band does mean that we might see more pressure in the Nifty Bank, which in turn should affect the Nifty itself. The Nifty Bank could possibly test 39,000 odd levels, maybe in the worst case scenario 38,800. So look for some more declines in the next 1-2 days. Having said that, I have one buy and one sell call. ONGC is a BTST with a stop at 152 for targets of 154.5. And Page Industries is a STBT. Keep a stop about 37,750 and look for a target around 37,100.
Okay, all right. Thanks a lot for that, Mitesh. By the way, it appears that we are playing out that 3 p.m. move. Pull up HDFC and HDFC Bank, both of them out there. They have moved to the low point of the day. And you're talking about a large part of the Nifty that's moved lower. So HDFC Twins as well as ICICI Bank, if we can get those frames up for you on the screen, you'll see the HDFC Twins have moved lower, and that's what's putting pressure. And now we're holding around that 17,075 odd mark, which I was talking about earlier. You don't want to end below that level because positioning at the start of this hour was 17,075 odd will hold out. But for the time being, let's turn our attention to the gas sector. As GAIL's new integrated natural gas pipeline, well, they've got that tariff increase of around 45% odd. Sonal, run us through a quick analysis. And then earlier today, we spoke to IGL, MGL as well as GAIL. So we could play some sound bites as well.
Oh, yes. So there was a lot about the gas sector, right? And the big update, of course, is the fact that GAIL has seen a tariff hike, and that is to the tune of 45%. This time around, it has been hiked to 58.9 rupees per MMBTU, slightly lower than what PNGRB had spoken about earlier and also what GAIL had asked themselves. But quickly getting you the brokerage view first up, and then I'll talk about what the companies told us earlier today. Citi says that integrated tariff hike should put to rest skepticism around regulatory issues. Jefferies says that they see a 17% increase in EBITDA on the back of this big hike in tariffs that has come about. Morgan Stanley says that this implies 2,000 crore in terms of additional revenues and 14% upside in terms of EPS for FY24 and 12% in FY25. JP Morgan says that tariff hike and lower spot LNG prices, they are the key triggers for the stock going forward. And Motilal Oswal says they increased their EBITDA estimate overall to 13,400 crore rupees versus 11,600 crores earlier. Now we spoke to the users of gas, that is IGL and MGL, to whom this gas will get transmitted at higher cost, and also GAIL. So GAIL told us that EBITDA should overall increase by around 1,600 crore rupees, which is on current volumes in the transmission segment, which is around 107 MMSCMD. They transmitted 111 last year. They plan to hike these levels to 121 in FY24 itself. So additional volumes and additional tariff is what will play for GAIL this time around. In IGL and MGL told us that yes, it will lead to a hike in their raw material prices and they will pass it on to the customers. It's a complete pass-through that they will do, and it will be a gain for some users and a loss for others depending on the location that they are at. IGL said that input gas costs will go up by 80 to 85 rupees per SCM, but they will not pass it on to their customers. But one thing that both the users said, that on 1st of April they expect the outcome or the finalization of Kirit Parikh recommendations. If that happens, gas costs will come down. So in that case, the higher tariff will be nullified, and that is only when they'll take a decision as far as price hikes are concerned. So we spoke to all of them. Let's listen into what the managements of GAIL, IGL and MGL had to tell us.
We are examining the order and we'll go back to PNGRB for review of their tariff order which they issued yesterday. So it's a very early reaction because we have received yesterday only, and these early study suggests that certainly we will approach to PNGRB for review of tariff for upward revision. PNGRB has notified the tariff for 9 of our physically interconnected pipeline. If you see the weighted average tariff for those pipelines currently is around 46 rupees per MMBTU, which has been increased to 58 rupees 61 paisa. That means there is an increase of 26% for these pipelines. and this increase will result into increase of our revenue and also the EBITDA will, by almost 1,600 crore rupees per annum, only based on the actual volume flow being done by us.
We are yet to receive the numbers from PNGRB, but it seems 1 rupees per kg per MMBTU per kg in CNG terms is perfectly okay. On 1st of April, Kirit Parikh committee is also expected to roll in, so we will see price revision with effect from 1st April because these tariffs are also applicable from 1st of April.
So we are also yet to receive the final impact on IGL, but our preliminary analysis reveals that the input gas cost will go up by say 80 to 85 paise per SCM. And we don't have immediate plans to pass it on to the consumers because we have not increased the prices for long in the past. We will review these prices as and when Kirit Parikh committee recommendations gets implemented. In case PNG, this Kirit Parikh committee recommendations are implemented as recommended, I think there will be reduction of around 1.5 dollar per MMBTU.
Okay, so that was a takeaway from a conversation that we had with the multiple players in the gas scheme of things. By the way, the market sell-off, at least in banking, is becoming pretty pronounced now. We're looking at a 1% decline on the bank Nifty. Suddenly 400 points gone from that index. So it's a pretty severe sell-off as we get into the fag end of the day. Look at that. It's just a one-way move on the bank Nifty with absolutely nothing on the other side. And that's the contribution plate. HDFC Bank, ICICI Bank, SBI, all the biggies are down there. The Nifty itself is down about 0.5%. This onslaught that the banks are bringing, that's being countered to some extent by a couple of the FMCG names like Nestle. There's ITC on the upside. But other than that, you don't have too much in terms of the heavyweights. There's Bharti and Maruti, a bit of a buying on lever as well. So FMCG is basically trying to offer some sort of a counter because banks, along with Reliance, that's a pretty heavy sort of negative dose for the bulls to digest. Let's bring in Sudeep Bandyopadhyay into the conversation now. Sudeep, good afternoon. Thank you for joining in. First, broad thoughts. I mean, so a lot of the big events are done and out of the way, right? And the markets, I think, still trying to find direction. What do you see ahead? Do you see maybe a 300, 400 point broad range and we keep trading within that? Or do you think that there's a serious risk of testing that 16,800 zone all over again?
Good afternoon, Surabhi. I don't think we will go beyond a certain level and probably will not break that 16,800 you're talking about. There was a lot of confusion in US markets yesterday. We heard Governor's statement, Jerome Powell's statement, and then Janet Yellen's statement was created all the confusion. There is a strong view that I think the market has kind of overreacted to Janet Yellen's statements. I think the intention which was trying to be communicated was that there will not be a blanket guarantee from the government on all deposits. Of course, the small deposits and others will get protected. And I think the way US Fed has been handling ensures that depositors are not at risk. But the government is not giving a guarantee. I think that was being communicated, but market probably took it really hard and there was a selling all around. And we are getting that kind of played over all over in the emerging markets, including India. There is significant amount of selling, I believe, going on as we speak today. Also, we have to remember that today is Bank Nifty expiry day. So some amount of risk aversion is very clear. Considering everything, market probably will start stabilizing tomorrow onwards, and we will see it remain range bound. That's the more likely scenario.
Sudeep, afternoon. Thoughts on JK Tyre? Is that a stock that you look at? Yesterday rallied about 3-4% after World Bank Group's private investment arm IFC invested close to 240 crore or $30 million in this stock to expand their radial capacity, their manufacturing capacity by 10% by 2025. But look at the up move in the stock today. It's rallied 12-13% now, 11% on JK Tyre's. Phenomenal gain, 2 consecutive days now. Thoughts on JK Tyre and how it's positioned?
Absolutely. We have been tracking the entire tire industry, and JK definitely is a player to be reckoned with. considering a couple of things that, this in automobile industry, the debate between the traditional engine and the EV has been raging, and one doesn't know which part of the business will emerge as a winner and who will emerge as a winner. But tire remains a constant, and so there is no disruption like the one we are seeing as far as the main automobile manufacturers are concerned in the tire industry. That's point number one. Point number two, I think genuinely the tire demand and replacement tire demand has gone up, considering the number of vehicles on the road has gone up in India consistently. The third thing is, of course, the crude oil prices stabilizing and coming below that $80 mark definitely does help the tire industry medium to long term. The fourth, of course, what happened specifically to JK Tyre as far as the new investments and new facilities and new opportunities definitely excited the market. So yes, JK Tyre and pretty much entire tire industry should be looked at from a medium to long term point of view. JK Tyre, obviously because of the news flow, is in action today.
Got that. Do you track GR Infra, Sudeep? And the other one is Sobha. We were talking about this same time yesterday as well. Yesterday was a big cut. This morning it was higher by 3-4%. It's down by that much now. So GR Infra and Sobha, if you have any views.
GR Infra, of course, we heard about the order wins from NHPC and the NHAI. The NHPC one is, of course, much larger, and order win of that magnitude definitely will get the counter excited, and that's what is happening. Overall, our view on infrastructure construction sector has been positive, and we believe that with the kind of capital expenditure the government is committed to make, some of these companies will benefit disproportionately. And that's what is pretty much getting played out. It will all, of course, depend on the efficiency with which they execute and the margin they are able to make eventually. But at this stage, with the order wins coming in, in large numbers, I think the counters are definitely excited. As far as Shobha is concerned, I think overall real estate is a mixed bag. And there has been pulls and pressures, and considering that the upper end of the housing segment is getting into a bit of a challenge, maybe post changes made in the budget as far as capital gains tax exemption via investing in property beyond a certain limit going away, the upper end of the market will get affected to an extent. But the other part of the market, I think the demand continues to remain robust, and Shobha operates in a big way in Bangalore. And that market has shown significant traction both on residential as well as commercial. So medium to long term, I think Shobha look good. Short term volatility one has to withstand.
All right. Hi, Sudeep. Good afternoon, Sudeep. I wanted to ask you about Campus Activewear. I'm not sure whether you track this footwear space. But from in October, the stock was closer on 700 rupees. Now it's nearly half from there. And any kind of bounces are getting sold into. I'm not sure whether there's a selling overhang out there, or the street at least I think is reading it that way. What's your view on the stock? Because even after such a severe correction, it's still trading at very elevated valuations.
That's exactly what, Nigel, the challenge is. I think when it reached those levels of 600 plus, it was kind of absurd valuation. And, somewhere it was ripe for correction. The correction happened. Also, it coincided with the, overall market correction. And that's why it looks brutal. But as you said, even after this correction, it looks, really elevated from a valuation standpoint. Overall footwear segment, definitely India consumption story being robust. And we believe that there is significant opportunity as far as footwear is concerned. Also, remember, some of these companies are getting into the global supply chain, and there are significant export possibilities as well. So long-term story remains intact. As far as Campus specifically is concerned, I think, at this stage also, I'll be a little cautious. If somebody has to go and take a bet on this entire footwear space, I would probably recommend a Bata still, considering the turnaround and considering what's happening overall with the brand.
Okay, all right, Sudeep. Good having your thoughts as always. We will keep it a little short today because we're running into market close in the next couple of minutes. Thank you very much for joining in with the perspective. Quick break. We'll come back and count down to the close.
Welcome back. Just 3 minutes to go for market closing, and it's a disappointing day if you were looking at the market. Even by 2:15, 2 o'clock, when the market was absolutely flat, hoping for a bounce, it's gone the other way. Of course, the options expiry is also perhaps has a part to play, but it's not as if the market was looking super strong from the word go, and it kind of turned around. It did turn around very sharply post 2:30, post 2:10 to 2:30, but it's a kind of a market where if you have an intraday view, it could be either bullish, it could be bearish. It's most likely that both will be correct at some point, and then some more. So that's been the kind of market we've been seeing for the last so many trading sessions, up and down again a few times over. So the volatility continues. 17,071 is where the Nifty leaves off at, and you've got the Bank Nifty, which leaves off about 1% lower at 39,584. So financials are the main sort of pockets of pain. SBI, Kotak, IndusInd are the three big losers on the Nifty, and the non-bank losers on the Nifty are HCL Tech and Bajaj Auto. Rima.
On HCL Tech, Accenture will be reporting their numbers post-market hours India time. It's a US-listed company. And the question is, will they cut their full-year guidance given the banking turmoil? That is something the street will be watching, and it will be a lead indicator into the Indian IT earnings Q4 season, which begins in April. So IT has been on the back for this whole week. The Nifty IT index down 3%. Reliance was disappointing, ends down with a cut of 1 1/3 of a percentage point. BPCL under pressure. On the gaining side, you had Hindalco benefiting from the drop that we've seen in the dollar index. Auto names like Maruti Suzuki, Tata Motors ending with strength. Along with that, Hero MotoCorp, all of them have announced a price hike which will be effective 1st of April or in the month of April. Nestle was also higher in trade. But in the broader markets, it's the Nifty Bank. I mean, it's the banking and the financial names, right, which took a big blow.
Yes, absolutely. I mean, if you look at some of the movers and shakers on the downside, Sobha to start off with had another rough session. Vedanta, because of the kind of news flow, though, of course, there was a denial from the company that they're not looking to sell any stake. Still down about 5% on that stock. Then you have a couple of other names, Bank of Baroda, for instance, RBL Bank, IRB Infra, Delta Corp. These are the names where we've seen about 2 to 3% shaved off. These are basically the high volume losers. Having said that, it's not as if the mid-cap market didn't have any gainers, so to speak. I mean, you had big moves. Look at a JK Tyre. It's going home with a gain of almost 12%, so it's a big one there. Something like a VA Tech Vabag, 7%. Star Cement up and about. Spark, Sun Pharma Advanced Research, about 11-12% higher over there. And the Adani Group had a pretty decent session. Adani Transmission, Total Gas, some of these Adani stocks managed to find takers as well. Anupam Rasayan, of course, you've heard the management on the channel recently, up about 3% as well. So interesting moves on some of the mid-caps. But overall, yes, the market, of course, having to deal with the expiry play out, specifically on banks, and lots of pressure there with a cutoff for 1% on the Bank Nifty and just about 0.5% on the Nifty.
Well, with that, it's a wrap then on Closing Bell. Thank you for watching. Don't go anywhere. Our Thursday special, Big Deal, comes up next.